Hey people, how you doing today? Good to chat with you. I am looking at some people have been asking me to go over the expected high and low analysis tool here that I've got. So I'm going to take a deeper dive into a bunch of markets here for you today, and we're going to see what we turn up with the expected high-low strategy. Now again, this is an indicator. This tool is basically a data mining tool. We're finding out if markets respect well, in this case, we're going to see if they respect the R1, S1 levels. You know, the pivot points formula, the pivot point you've got in the typical price of yesterday, and then you've got R1, R2, R3 above it, and you've got S1, S2, S3 below it. Well, those are usually good for support and resistance. And what we want to do today is see how good they are. The strategy here that we're employing is basically a very simple rule set. We're going to go short if the price hits the R1 level, or we're going to go long if price hits the S1 buy level. And we're going to see if that is a profitable strategy, and if it isn't, we can use that information as well, and I'll show you that in a second. So let's start off with one of the granddaddies here. This is the NQ. Today it's a 5-minute chart of the NQ. We didn't get anywhere today, so we stayed within the R1 or S1 level because of Friday's big move. We had some wide-ranging action yesterday. But I do want to take a look at it. Up here in the top left corner, overall, if we were to trade this strategy every day for the last 400 days, 426 days, it's a loser. It's $17,000 loser. So we've had a lot of breakouts here in the NASDAQ, and this is telling us we don't want to be simply selling at the high or buying at the support. So we can use that information positively. For one, longs actually work pretty well. So if we were to buy at S1 and hold to the end of the day, in this case we're holding until we go flat at 1550 Eastern Time. So longs actually didn't do so bad. We have 52% wins, 68 longs, 64 losing longs. The average is 72 bucks, so very minimal benefit there. Profit factor is 1-to-1 roughly. We did have, a bunch of trades. The maximum adverse excursion, this is actually the average adverse excursion. So what it's telling us is that on the longs, we could actually have a pretty big move against us. On average, we move against the position by $1,382. So it's not so smart just to buy and hold at the S1 level. But still, that information is helpful. Now, the maximum favorable excursion, again, this is the average favorable, is 1437. So once we hit this level, we buy. The favorable excursion on average is $1,400. So there might be something to look at there. I would be interested in if a price does hit the S1 level in the NASDAQ, look for buy signals. Look for buy signals. Now, on average, 52% of the time, price has closed above the entry level. That basically means that we're, in profit 52% of the time. If we move further and down and down and down against it, then still 52% of the time we're going to close above that level. So that's important and good information to think about. We could base some trading decisions off of that for sure. Now shorts, on the other hand, selling at R1 is a 47% win rate. We average trade at the end of the day is $300 loser. Now the adverse excursion on average is $1,362, so it's not as bad as the longs. And the average favorable excursion is 1,500. So it's telling us that it's kind of even, 1437, 1,500. R1, S1 are interesting levels. I would say though, if we do break above R1, now the NASDAQ has been on pretty much an uptrend most of the year for the last 400 days. You don't want to be selling at the high on average. Now it's not, it's almost 50-50, so it's not dramatic, but that's what that's telling us. So we also have another uh, another rule set is we could exit at the high of the if we're going long at the green level at S1, we could sell at the resistance level 1 there. Um, Here's a trade that we just got blown out of the water by. So we went short at the high, and this magenta line shows that the market just rallied against us. This was on Wednesday. You can see the 5th of June. And at 1550, we exited that position, and we were at a big loss on that day. So that's all getting averaged into our calculation here. Here's when we went long. We bought at the R1 support 1, right? Um, and again, we're only entering the trade between 8 o'clock and 1530. And so we went long here, and you can see we had a big drawdown, big move against us. It closed at 1550 in the last 10 minutes of the day. We rallied still, but so those are the rules. You know, you don't want to be buying blind at S1. You want to hold on and look for buy signals. Now, this is a good time to look at signals. We're seeing some bar reversals. We're seeing a 1, 2, 3 bottom and some support coming into the market. Definitely good for a big rally. So again, longs are 52% of the time we close at 1550 at the time, 1550, 350 in the afternoon, we'll close above R1. So I would be interested in this trade. This was a good time to look. One other thing too, we do have a day of the week analysis down here. Mondays, there's 41 Mondays in our analysis. If we were to only trade this system on Mondays, we're up $8,800, 56% win rate, and 25 wins, 20 losses. Tuesdays, not so good. You know, we've got news coming out and the market's quite volatile. So we only won 40% of the time. 10 grand, 11 grand, we would be out if we only traded on Tuesdays. Wednesdays, up 66.50, 52% win rate. Thursdays, Fridays don't look very good at all. You know, I wouldn't be trading this, or I would be looking for the alternatives. You know, Fridays might be a good time to buy the low, buy the high and sell the low, looking for a breakout. All right. Lastly, let's take a look at Monte Carlo analysis. Now, for those of you who don't know Monte Carlo, I mean, you might want to just Google it. Probably do better explaining it than I do. So we want to look at all these trades and we want to mix them up and grab like half of them and see what the P&L is. So we're doing 100 simulations total. There's 278 trades that we're taking. That's how many trades are in this analysis. But we're only sampling 139 at a time. So if I took half of those just on random, added them up, it shows us we have only a 28% of them were above zero in their P&L. So this strategy is pretty raw if we just take it on face value. If we buy it S1 and sell it R1, we only have a 28% probability that our P&L will be positive based on this kind of analysis. So Monte Carlo is a way to take a small number of samples and kind of estimate what our P&L is. All right, well, let's mix it up a little. Let's go over to, I want to show you heating oil. Heating oil is kind of a fun market, but today was a big day in heating oil and in crude. Here is a, yeah, June 10th. So on Mondays, this is not a good strategy to sell at R1. And in that case, it might be a good strategy to buy at R1. So let's switch this over. I want to go over and show you just what Mondays look like. So this is Monday analysis only, because what I want to show you is that only 24% of the time is it a winner at R1. If we were to sell at R1, 24% of the time we actually come in profit at the end of the day. So that means 76% of the time we don't, and that's a really critical number. So heating oil, you want to be buying at R1 on Mondays. That will turn around a lot of this losing number, and that's what you want to take a look at. I'm going to shift over to the MCL contract. So this is crude, it's the micro crude, so these numbers are a tenth of what they would be on the crude. But you can see also here on Monday, Mondays you don't want to be selling at R1, you want to be buying at R1. And that's what we're showing here. So 55% of the time, we were a loser by selling at R1. And that's what we want to take a look at, buying at R1 in the future. Now, there are some days here, Tuesday, Thursday, Friday, where this strategy is pretty profitable. So winning 53% of the time, winning 48, 47% of the time. Totals are here. So this again is the micro contract. You would put another zero on the end for the full contract. The average income per day following it is $47 on a full contract. Max drawdown I list here, so that's significant. You know, $1,200 drawdown on the micro is pretty big. And overall, longs and shorts are pretty good. And Monte Carlo shows us here, you can see Monte Carlo shows us 79% probability of a positive P&L. So if you were to take a risk on this strategy, you would have, you know, roughly an 80% chance of being a positive P&L. So there's some strategies and markets that you'll get a 90, 95% probability of positive P&L, and that's something that is very, very good to look at, keep an eye out for. Let's take a look. Everybody wants to look at Bitcoin. Let's take a look at Bitcoin. This is the Bitcoin futures now. Bitcoin overall, all days average together, we're a loser, right? So we're down 82 grand if we were to go long at R1, S1, short at R1. So Bitcoin is breaking out of these levels. So you want to take a look at that. There's some consistency on Mondays are the worst day. 38% winners on Mondays. So you might want to be buying at R1 and selling at S1. And pretty significant change there, difference. So we've only got 38 Mondays in here, and on Mondays we've got 15 winners, 24 losers. So there you go, there's Bitcoin. Let's take a look. Silver is always one of my favorites, drawn to silver. Mondays are bad, Tuesdays are good, Wednesdays are bad, Thursdays are good, Fridays are horrible. So Friday you might be looking at a reverse idea on that strategy. Here's an example. Here's last Friday. You don't want to be buying at support. Fell through. So this red line, the pink line here, shows us the from the entry to the close of the day at 1550. Thursday, this was a loser on a long short. So we went short here at the time 8:36 in the morning, and then silver just took off and rallied. So there's a lot of good information here you want to be thinking about when you trade these markets. The YM, let's see if we've got anything good to look at here. YM, here's a good round tripper. Here's a round trip trade. So we bought it, support one, we sold that, we exited out that, and then we went short at R1, closed at 1550. So this was a 2-win day. And this was just on last Friday here. Fridays in general, not a good time to trade this strategy. And Mondays and Wednesdays definitely could be. Just the regular buy at the S1, sell at R1. So that's kind of an overview of some of these markets, something to keep an eye on. Natural gas, not so good, pretty much at everything except for Friday. Again, trade the reversals of that. So that's my probabilistic outlook here for these markets. And that's for coming up tomorrow on Tuesday, the 11th of June. Let me know if you have any questions. Love to hear from you.